What is up, guys? Today I'm be going over my model that I found to be the best. So just to kind of, I'm gonna start with a background here. I have tried about, I haven't, I've back tested thoroughly throughout the years, support and resistance. So you can think both. What I'm about to write is just for background information. If you see this and you're like, what the hell? Tory trades, what the fuck? I'm going to give you everything I have learned, and then we're going to move into my model. So, Tory trades, this guy named Mamba FX. Yes, their strategies work. I have backtested them thoroughly for months on end for the reason of strictly passion. I'm just passionate about this. I do this for fun, just like you probably watch or play video games for fun. I'm passionate about people's strategies. I don't care if they're profitable or not. I just like the fact that it works. I'm just how I am. I like to backtest pretty much everything for the sake of my own interest and just passion. So we have also backtested something called IFVGs. IFVG. I have backtested something called um, so break and retest. You can think set and forget. So from Alex G. My favorite one. I look up to him a lot for the very reason. Again, I have backtested every single one of about four-ish trades a month that he took on his 100 to a million series. If you weren't part of that Telegram, looking at every single one of the trades that he said called live, went onto the charts and verified it yourself, you have no reason to talk. Because I sat there for 3 months looking at every single thing that he sent. He doesn't even send the symbol for it. He will just send a screenshot. And I have to go and look at every single chart and backtest every single chart while I'm at it, trying to find the things that he is sending. So for that reason, I'm very, very backtested. I have his entire model memorized, pretty much done and memorized. Great. So it works amazing. Win rate's okay. I have also, that's it. And that's basically it. And then ICT, different forms of ICT. We have like Kane's model. Kane has a nice model. When he uses the M5, he dominates pretty good. Um, but this is where I'm gonna be coming in. This is my model. So for this is let me just make it here. This one's my model. So works 100%. Works 50%. Right. Works works great. Lower win rate, about 63, 65% win rate. But he targets higher RRs. You'll see him hit a 1 to 3, 1 to 4, which is very good for the risk to reward. And then my model. Back tested, proven. I don't even have to put this number. I don't want to put this number. So I'm going to just say high win rate, simplest of the ICT. Nice, clean. Let's get into it. This is the background. Liquidity sweep, internal sweep, mainly external sweeps, high time frame fair value gap, 1 hour, 4 hour, 15 minute. Okay, this is a liquidity sweep. This was a 1 hour bearish fair value gap, liquidity sweep inside of it. Market structure shift M. Market structure shift. Return to fair value gap R. Return to fair value gap. Stop at the swing high. Target a 1 to 2. I do not target internal or external range liquidity. You will see most of the time when I point out in my model later on in the coming videos or however long, you will see yourself if you start using the model that external range liquidity points will not be touched. Will get very close but not be touched. And so I have back tested that a 1 to 2, targeting a 1 to 2, and the standard deviations we'll get in later is way more effective in that sense. So my last notes: high time frame bias. Do not short with an M5, M15 gap below. Do not long with a bearish gap above. So unless the trade could play out of to the minimum R, as in a pullback trade. I will give an example of a pullback trade. This liquidity sweep, SMT. If you don't know what SMT is, got it later on in the document. M15 bounced, obviously at this point where I put the arrow. We are trading back into this M5, M15 with the minimum R being met, meaning the trade is okay. A minimum of 1.5 risk to reward. 1 to 1.5 risk to reward. The trade must meet a minimum R targets 1 to 2 or -2 standard deviation. If it's more than 1 to 2, it is usually a minimum of 1 to 2. 1 to 1.5 are okay. But 1 to 2 is what I use for the model. Study them individually, put them all together. Break-even point. It's a candle closure below the swing that retested the FVG. You can see here, there is a fair value gap here. Break-even would be this closure. Came back, hit break-even. Standard deviations. To give insight on the movement, this is just another way to target. The model is done. Mind you, the model is done. You can pause the video and continue to watch just whatever I said. The model is done. This is supplementary. It is extra. It is statistically made for higher R trades. So you're not just sat there taking 1 to 2s all the time. This is where it gets a little bit different. You can pause video, watch the other thing. The model is done. You can be profitable and that's it. That was the model. You can backtest it right now. But I will continue to talk. So for those of you that understood that, we have standard deviations. Manipulation leg will tell you the long-term movements. -4. See on this, the last manipulation move up. How it's used is the manipulation leg that touched the fair value gap last. You take it on without the wick, so just the bodies, and you will take the manipulation to the -2. It is a safe target. Not using wicks is safer. The wicks are okay. They end up just becoming slightly less safe. This gives us room to target around a 1 to 3 now. Minimum of 1 to 2, but the manipulation leg that touched into this fair value, the -2 range is taken as a precedence, and this is taken. It depends on your R. You may get a 1 to 3 with this deviation or 1 to 4, up to a 1 to 4. It ups the risk to reward drastically. This is the power of standard deviation. -2 to the T. See this from the manipulation. -2 to the T. Okay. From the manipulation move. With wicks. This is with wicks. Because that is statistically the correct way to do it. With wicks. But I use bodies because it gives a tighter range and therefore a more achievable outcome. That is the statistic. Take to a -2. See, look at this. -2. Sorry, negative. Look at this before the pullback. -2 exactly, almost. And then on another pullback, -3. So this is the power of it. They are levels of support and resistance. If you want to watch something like FX Alex G, he will help you with that. In general, something like this, equal lows right at the -3 point right here. After 10 a.m., power of 3, which I will get into in another video. That is the final model. That is my model. All of this is my model. Thank you for watching. This has been B Shal's SMR. B Shal's SMR, adapted from Terson's. So thank you for all. Please rewatch the video. Thank you.